Good afternoon. This is Josh here at Chaikin Analytics, and I'd like to welcome you to Sandy's checklist for finding the best stocks to buy on pullbacks. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Chaikin Analytics is not registered as a broker-dealer or investment advisor with either the U.S. SEC or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. As a reminder, this webinar is being recorded and a copy will be sent to all registrants tomorrow. Be sure to submit any questions that you have by using the Zoom Q&A window, which you can access at the bottom of your screen. I'll be available to respond to your questions throughout the webinar. Sandy Chaikin is co-founder of Chaikin Analytics, a groundbreaking stock research and analysis platform. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics, and she built a killer portfolio that continues to outperform the S&P 500 and most money managers. Sandy is living proof that you don't have to be a financial expert to pick winning stocks. Thousands of investors attend her industry events and her weekly webinars on fearless investing by following the Chaikin method. NASDAQ.com, Daily Worth, and Elevate all feature Sandy's investing articles and analysis. Now, to get us started, here's Sandy Chaikin.
Josh, thank you so much, and thank you all from the Chaikin community as well as Hubert Center's community and Benziga. We appreciate our partners sharing this with their members. So as Josh said, we're going to be talking about how to find the best stocks to buy on pullbacks. And as we all know, the market has been pretty volatile lately, right? I mean, we've seen a lot of swings up and down. Here is a chart of the SPY, and what today is all about is how do you take advantage of those pullbacks? How do you find or know how to identify those pullbacks when they're about to happen, and how you know when to pull the trigger and buy the stock, and how you know when to pull the trigger and sell the stock when the time is right. So that's all what we're going to be going through today. But I always like to start out with just a little bit of where we are in the market as an overview. So let's look at the S&P 500, which is the index against which most of us gauge our performance. And as you can see, it's been pretty hectic since, particularly since October, right? You got all these gyrations, ups and downs, this huge drop December 24th, you know, when we dropped, I think it was 19% just on that one drop Christmas Eve. But since then, we've had a pretty steady ride up, and we're now about 17% higher than we were on that very low on December 24th. So this is good. The market seems to be on a tear. Mark Chaikin and our chief market strategist, Dan Russo, are not predicting any big drop. I know you hear on the news all sorts of fear mongers always saying that a recession is coming, but from their expertise and vantage points, they see no reason for alarm. But we do want to find a way to get in. If you're not already in, you want to get into the market, right? I mean, it's already gone up 17%. You want to take advantage of that next 17%, right? So that's what we're going to be talking about today, how you identify those opportunities and take advantage of them. So again, just to put these pullbacks in perspective, we were down mostly in the 10 to 20% range over the last year. The 20% we hit in December off of the low, which actually put it into bear market territory. And that was just an intraday low for one day, but mostly for the last year, we've been in the 10 to 20%. Now, what this means is that the decline usually lasts on average 4 months. I mean, for us, this last term, it started in October, if you recall, October, November, December, January, we started coming out of it. So we really only had 3 months of decline. And the average time to recover in months is 3 months. And we've really been recovering January, February, and now anticipate March. So by April, we could be smooth sailing. And that's what our experts here at Chaikin are saying. Another indicator that we look at is the fear and greed index. Now, back in December, there was extreme fear, and now we're into greed. So rather than being fearful, now people are greedy. They're getting back into the market, and that's why we're seeing so many of those prices continue to climb, because there's a lot of demand for those stocks. But you need a disciplined approach so that you can avoid this, the news. You can avoid the craziness of gyrations every time China hiccups or Trump tweets. You get these big gyrations. Dow jumps 400 points. Dow closes lower after swinging more than 500 points. I mean, these are typical headlines that we see almost on a daily basis. So how do you make sense of that and not react? Because we are, after all, human beings, and human beings have emotions, and that causes us a problem when we apply those emotions to our investing. The research shows that investors run for the exits whenever the market drops, and that can cost you 4% a year. So you take those drops over time, that's a lot of 4% you could be down in your portfolio, which you can avoid. Let's look at another little piece of research to put everything in perspective. Is in that the S&P has grown an average of 9% or almost 10% over the past 20 years, which isn't bad. So if you invested solely in the SPY, the S&P 500, your portfolio would be up on average 10% a year. And this bears out even past 20, it goes into 40, 50 years back. The average still stands. The problem, though, is that individual investors only averaged a 2.5% increase each year. That's a lot. That's a lot of digits below 10%. And the culprit there is our emotions. Again, we're humans. We trade on emotion, not fact. And so what today is all about is to give you the facts and the tools and the methodology so you can trade on and invest on facts, not emotion. So what I want to do today is to show you how I find the best stocks. These are stocks, we call them bullish rated stocks in our methodology. You can see the 1 year performance has gone anywhere from these stocks that I've been in or am currently in, have gone anywhere from 22% up to 120%. 110%, excuse me, on a 1 year performance basis, while the SPI in that same time frame is up 1.7%. So would you rather be in a stock like Boeing or Crocs or Cadence or Salesforce.com, Varinet stock I just sold, made a nice profit. Boeing, I just sold that, made a nice profit. These are stocks you can get into. And wouldn't you rather be there than in stocks that are in the single digits or so? So that's what today is all about. Another really a figure that we pay great attention to is Warren Buffett. Arguably the best investor of our time. What he says is investors should be fearful when others are greedy, and greedy only when others are fearful. So you want to go against the trend, basically. And right now, as that fear and greed index showed us, investors are greedy. They're buying stocks. That's pushing the prices up. Now is not the time to buy stocks when they're at their 52-week highs. You want to wait for them to pull back. You want to wait for when people start selling. And that's when you can get them at a little bit lower price. So today I'm going to make this promise to you that you're going to discover how to find the best stocks to buy on pullbacks. And this is really coming out of an investment. Wasn't even a strategy, but it was a debacle I faced in 2008-09 when my IRA was being handled by a wealth manager, and the account lost over 50% in those 8 or 9 months. And just despite my repeated calls to, don't you think we should sell these? And the comment I always got was, no, you know, they'll all come back, just stay the course. That wasn't a great strategy back then, to watch your account lose 50% in value after it taken me basically 30 years to build that. It was a pretty devastating time for me. So once I took it out of the wealth manager's care, and Mark and I were just getting together, he said, look, why don't you just put it into an S&P 500 account at Vanguard, open an account at Vanguard and put it in there until you decide what to do. That's exactly what I did. And then, and that actually was the catalyst for starting Chaikin Analytics. Mark came out of retirement in 2009 after seeing myself and millions of people like me take literally billions of dollars out of traditional brokerage firms and open up self-managed accounts like I did at Vanguard. However, we didn't know how to invest. You know, I was clueless. I invested in mutual funds and had more recently left that up to the decision of the wealth manager. So that was really the catalyst of starting Chaikin Analytics. And since I've been investing in Chaikin Analytics, I've been beating the S&P 500 each year. And since the research shows that 4 out of 5 pros underperform the S&P 500 each year, I've been beating 4 out of 5 pros. So as you can see here, the stocks that I've been in, and I only hold, it was 8 or 10 at these earlier years. It's now 10 to 15 as my account has grown and I diversify it a little bit more. But you can see these are pretty handsome winners that I've been able to find and invest in. And this is all doable. You know, I have no background in finance or economics or stock market at all. It's strictly based on this 5-step process that I've honed using the Chaikin workstation. So all of this is about making more money in the market, right? And we put the caveat on with less risk. And all this is making money so that you can enjoy those profits and obviously put your money towards your retirement account, but also enjoy some of that money along the way. And Mark and I have been able to take some pretty terrific vacations. Most recently, we spent the month of October in a little town in Umbria, Italy called Spella, which is the view you see here in the bottom right, and this beautiful little street, which is pretty much what all the streets look like in the middle of the page. But you know, that's what we like to do. So think about how you want to spend some of those profits when you are investing, and it makes it more fun actually to have something to work towards. So I'm going to pause here for a minute and ask Josh to put up a poll, because I want to ask you what are the challenges you are facing. What gives you pause when you go to, say, buy a stock and think, oh, I better not buy it right now, or you go to sell a stock and you think, I don't want to sell it right now. You know, what's giving you hesitation to invest and make confident decisions? And you can check as many as apply. Thank you, Josh, for putting that up.
No problem. We'll give just a few more seconds here for people to vote, and then we'll share the results.
Okay.
All right. Let me share the results with everybody. See that?
Okay, I've got it. Thank you. So, as always, timing, when to get in and when to get out, is the clear-cut winner, which it always is. I always ask the same question on my presentations. It looks like number 2 is down at the bottom, the uncertainty in the market, volatility, and what the Fed is going to do. And it looks like we're tied for 3 with emotions and information overload, right? And then followed by poor stock picking. Okay. All right, great. Josh, thank you. And thank you all who participated in that. That's really helpful. So basically, I've anticipated your replies and already built that into the presentation because it follows the same pattern that I see month in and month out, with clearly timing being the biggest culprit. So we're going to spend a little extra time on the timing step. But these are the 5 steps that we're going to be walking through in the next hour or so. And as you can see, know when to buy and sell. Step 4, is its own section. So let's get started. Are you ready to go? What I would do is take a pad and pencil or tablet or whatever you take notes on and get ready to take down some stock ideas, because what you want to do, what I'm setting you up to do, is to be ready when we get that pullback. And we'll always get a pullback. Market never goes straight up. We'll always get a pullback. You want to be ready to pull that trigger and make your stock buys then and there. And the market doesn't wait for us to be ready. So we have to be ready for it. So get a pad out now, or somewhere where you can take notes, because I'm going to give you some great stock ideas to follow. And at the end of the hour, I want you to feel confident versus fearful. Because if you're not making confident, if you don't have confidence in yourself and in the tools and methodology you're following, you're not going to make good decisions. And it's all about making confident decisions that'll lead to better results and higher profits. All right, so number 1 is to invest with tools that you trust. And I think number 3 or 4 rather was poor stock picking. This is exactly what's going to help your stock picking. This is really, our methodology is based on the Chaikin Power Gauge, which is, you can see it's a very simple gauge here saying very bullish. It's a rating that looks at the potential of a stock to out or underperform the market over the next 3 to 6 months. Think of this as a GPS for stocks. This is the centerpiece of our platform and built into everything we do at Chaikin. It's all, surrounding the power gauge rating. That's where we start. The power gauge rating cuts through the clutter. Information overload was near number 3 concern. This takes care of that. You don't have to listen to all the noise. And I'll show you clear-cut examples of how you know to depend on the power gauge rating and what it says on a stock versus what you may hear in the news. And we say it solves the information overload problem, which again was one of your concerns. It takes the data on the right and puts it into a very clear graphic. As you can see on the left, this is on Starbucks. And you can see it's given a very bullish rating up here. If I looked at the data on the right, I would have no idea what it says, let alone how to draw a conclusion from it. But that's the work that the power gauge does. These are the 20 factors that make up the power gauge. As you can see, they're rolled into the financials, earnings, technical, and expert components. But in each of those components, there are 5 factors that make up that kind of subsector. And this was, as I said earlier, Mark came out of retirement in 2009. He'd sold his company to a division of Reuters and been actually in retirement for 10 years. But after the 2009 meltdown, and when he saw my distress and quandary and the billions of dollars that came out of traditional brokerage firms and went into self-managed accounts, he said, I'm going to come out of retirement, take what I learned from my 40 years work on Wall Street creating tools for institutional investors, but build that into a platform that individuals as inexperienced as me, as you, Sandy, can use. And that's exactly what he did. So he took over 200 factors to start with. Over the course of the year, he tested them rigorously, boiled it down to these 20, which he found to be the most predictive factors to indicate where a stock is heading. And again, the power gauge rating looks at where a stock is headed over the next 3 to 6 months. Is this stock going to outperform or underperform the market? And basically, if you're looking to invest stocks on the long side, you're looking for stocks that are going to outperform the market. Otherwise, you might as well just go with the market and buy the SPY. But if you want these outsized returns, double-digit returns, the power gauge rating can help you get there. So I've green highlighted the experts down here. This is a component. This is more or less our secret sauce. This is data that would not be easily readable, easily available to find. But it's very indicative to predicting where a stock, or indicating where a stock is going to go. And I depend on basically the overall rating, as you see with Starbucks, with the very bullish rating. And the only other factors that I really drill down on are these experts. I want my expert component to be bullish, as well as this earning estimate trend. And earnings estimates can really, and how analysts perceive a stock, can be very indicative of where that stock is headed. They have tremendous sway over a stock price, as we see right now when we're in earnings season. When a stock beats earnings, it can spike handsomely, 10, 15%. On the other side, when it disappoints the earnings estimate, it can drop. So if you have a pretty good view of what the analysts are estimating and what that trend has been, that can be enormously helpful in knowing where a stock is going to report. Now, a little bit of support as to why we should depend on models more than our emotions. Models be human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. So again, invest with fact-based data, not emotions and fear. The power gauge rating has been back-tested and real-time tested. If you look at the last, I think it's about 20 years, 18 years here, half of those were in real time, half were back-tested. You can see that if you had only invested in stocks that were rated very bullish, your portfolio would be up 20% a year. If you only invested in very bearish stocks, they would be up an average of 1% a year. And the neutral rated stocks are up 8%, which is pretty close to that 10% or 9.9% we saw on average over the last 20 years. So clearly you want to go with stocks that are rated bullish, ideally very bullish, and you want to avoid these ones that we rate bearish and very bearish. Now, it's not just us who use the power gauge rating and the platform. I know a lot of you here from the Kramer audience. Mark and Jim Kramer have done a number of, they call them kind of fireside chats together. There's another one in the works being scheduled. And Jim's a big follower of Mark's, particularly his Chaikin Money Flow. John Carter, John Najarian, we have a lot of Johns here. John Malden, Simpler Trading, Benziga, the Benziga community who kindly promoted this to their audience. We've been written up in Barron's. And back in May, we were invited by NASDAQ to ring the opening bell in conjunction with a collaboration we have with NASDAQ and New York Life, where we've created indices with NASDAQ that have been turned into ETFs by New York Life to promote to their audience of wealth managers. So institutions are using the power gauge rating and the Chaikin tools every day. It's not just us who are singing its praises. And from the last fireside chat Mark and Jim did back in November, Jim says, I want to explain why I love Mark Chaikin's stuff. It's simple, it's understandable, it's rational, it's not emotional, and I use it constantly, and I almost never want to go against it. So that's key. You want something that works, but you want it to be simple and understandable and not emotional. So is it okay to move on to step 2, what to buy? This gets into your checklist of what you want to see in a stock before you pull that trigger and say you're going to buy it. So if you don't mind, just go into your Q&A box now, please, and just say go if it's okay to keep going, or if you need a little more clarification on the power gauge rating, because the power gauge rating is our foundation, as I said. Oh, great. Okay, Brent, Lance, Scott, Patrick. Awesome. Okay, great. I will keep going then. Thank you so much. What to buy? This is the classic bull, and you might want to take a note on this as well. They're basically these 4 components that we want to see in a stock before we're going to buy a stock. And let's go into a stock chart, and I'll demo it. But first, this is basically how a stock chart moves, okay? This, you have to kind of take off all these headings on here and just look at the way the stock, this is the way the stock chart, the stock moves. This was created by Dr. Wyckoff some 95 years ago when he was teaching a course on how to invest in the stock market, and it's really true to this day. Nothing's changed. A stock, as we know, doesn't go straight up or straight down, but it zigzags across, it shoots up, it pulls back, it shoots up again. What we're looking at is these pullbacks. This is where you want to buy these stocks today. You don't want to buy them when it's peaking up here. You want to wait for that little pullback. And a pullback can be anywhere from 1 to 3 days. It's not a big window. So you want to be monitoring your stocks to know when you want to make that pullback. And likewise, if you're ready to sell a stock, you want to be selling it when it's spiking up, as opposed to sideways or down. But let's look at a couple of charts here of classic bulls. This is a stock cadence design. And you can see from the trend line that it's nicely trending up, particularly since December 24th. This little triangle here is a buy signal. We have 6 pairs of buy and sell signals, as you can see indicated by these triangles. This is the relative strength. This is saying this stock is outperforming the SPY. But let's first start down at the bottom and look at why this stock is a classic bull. The first criteria for classic bull is it has to have a bullish power gauge rating, which is the green ribbon on the bottom line. You can see it had sections of yellow neutral, but since early January, it's really gone to bullish. And the relative strength is right above it. It's this heat map here. You can see that what this means is this stock has been outperforming the SPY pretty much since mid-October. And you'll remember there was a big drop in October. And this pretty much didn't waver that much. It was only a couple of weeks that it was really underperforming the SPY, which shows you how strong this stock is. But you want to invest in stocks that are outperforming the SPY. If they're just even with it, you might as well go with the SPY. And just invest in those 500 stocks that make up the index and have your 10% annual return, which is not bad. But if you want these bigger profits, this is the pattern to look for. I'm going to come back to overbought, oversold, but let's go up here to Chaikin money flow. This is the indicator Mark created some 40 years ago on Wall Street, and basically is how he made his name. This measures institutional money coming in and out of a stock. And why is that important? Well, institutions buy in such force, with so much weight behind them and volume, that they move prices. Think of the market basically as an auction. And in an auction, when there's a lot of people bidding for an item, the stock is bumped up. That happens the same way in the market. And you can see with this big chunk of money flow coming into this stock in early January, look what happened to this stock price. It just keeps going up because there's so much demand for it. It's pushing the price up. There's fewer shares for a bigger demand. That's what you want to be looking for. Let's go on to the next classic bull. This is Salesforce.com. CRM. Again, let's start on the bottom with the power gauge rating. It's been bullish since early January. Relative strength has been outperforming the market since late December. And pretty good money coming into the stock since mid-November. And you can see what happens once everything lines up. Power gauge, relative strength, and money flow all kind of comes into its own in January, and the stock goes from what's that, well, like 130 up to 160. And this actually has been a favorite of Mark and Jim Cramer's. They recommended this back in November on their presentation when the stock was 142. The stock triggered a buy signal today. That's this momentum breakout triangle right here at 160. And what I do when that triggers is I overlay the signal and see, okay, well, tell me what other, where it triggered before. And then I can see if the pattern is a pattern, a repeatable pattern that I like, that it does in fact go up when it says it's going up. And as I can see from these back signals, and I think there's one right under here in early January, yes, those were great signals to get into this stock at earlier prices. So these are stocks. As I said, this is a stock that Mark and Jim Cramer have recommended, but I found these stocks on my own, and I'm going to show you how I do that, because you don't have to be a Mark or a Jim Cramer to be able to find these stocks. You can find them yourself. And how do I do that? Well, let's move on to the how, and that is by screening. We have a capability in the platform to screen for stocks, and you can identify any criteria basically. You can see there's a whole menu criteria here. I had to go to this second little blurb up here because I couldn't fit it all on the screen. But basically it's one big line of criteria, and you can play with it and see these little carrots here. You can put in different criteria. And these only stocks that meet those criteria will appear in your screener. It's an awesome way to find great stocks literally in seconds. I mean, I'm not kidding. Really, you can do this in seconds. So the screener I've indicated up here, these are the criteria that I've been using. And you might want to write this down and do this yourself. When you become a member, you can run this screener yourself. I take the universe of the SPY. I want the power gauge rating to be bullish. This is the classic bull, right? And I told you in step 1, the power gauge rating, I like the expert component to be bullish, the whole 5 component roll up to be bullish, but I also want that analyst estimate trend to be bullish. I want to make sure that's bullish too. So you can see I've gone from a universe of almost 500 now to 58 stocks, just with those 3 criteria having been met. I want money flow strong, and I want relative strength to be strong for 6 months. Again, this is this classic bull pattern. I'm now down to 22 stocks. And then I wanted to take out non-volatility. So that's called beta of over 1 and under 2. And the reason I do that is because I wanted to steer away from the utility stocks that are kind of slow and steady. They're slow and steady, but they don't have the big swings typically. So they have been outperforming as subsectors and industry groups lately. But if I'm going to find stocks that are going to go up, 40, 50%, it's not likely to be in utility stocks. So I want to filter those out. And that leads me today with 7 stocks. So I've taken a universe of 500 and gotten down to 7, literally in seconds. I save this criteria. So all I do when I go into my platform is hit screener, go into this little folder here, which saves the criteria. And this is what this one's called, 2019 Bulls to Buy on Pullbacks. I can save multiple screens, but this is the one that I go to repeatedly. So I ran this screener a month ago. for a presentation. These are the 4 stocks that came up. You've seen we've already covered Cadence and Salesforce.com, right? We also triggered Regeneron and Oracle. How did those stocks do? Well, I ran the screener again yesterday for you. You can still see Cadence is on here. It's up 13% in that month. Salesforce.com is up 8% in that month, and Oracle is up 7%. Regeneron dropped off, but American Express and these other ones were added. So what I do is I'll look at the stock charts of each one of these. I can save this list so that I can go into my platform, pull up screener 0213 candidates, and I can run through the stock charts of each of these 7 stocks. The SPY, by the way, in the same time frame, the same month, was up 5%. So you can see these stocks handsomely outperformed the SPY. So let's look at one more of those as a classic bull to be considered. And this is one I would put on your stock list as well to consider buying. Look at that huge money. I should first go down to the power gauge rating, but I just love that big green chunk of money flow coming in. But okay, let's go on this. MasterCard turned bullish. Power gauge rating turned bullish late January. Relative strength's been strong since December, and money flow's been pretty strong too, really since November. With a lot of money coming in lately. But look what happens when all these 3 things line up. You know, that's your classic bull. You know, that's the pattern you want to look for. Now, do you want to buy this now? No. This is where you need to wait for the pullback. Well, how do you know when the pullback is? Go to this overbought, oversold indicator here. I told you I'd come back to this. So I'm going to explain that now. What this does is it charts that Wyckoff pattern. Remember that zigzagging up, down, sideways? This smooths it out. So when you're zigzagging down, like we were right here, when the stock was at about, not 195 in, what was that, early February, it was dipping down. This is this dip right here, under 30. On the overbought, oversold. That's when you want to buy them. You want to buy them on this other dip. This was December 24th. Big dip down, went down to what, 170. Dip down here, mid-November. That's where you want to buy them. You don't want to buy them when they're up here because you can see they're peaking up. They're high. As it is now, it's over the overbought line right here. And you can see that it's bumping up against these dotted lines. These are volatility bands. And what this does is it kind of channels the price. The price typically falls within this range. The volatility bands on the top and the bottom. I sail. So I think of this as the channel. And when you get out of the channel as a sailor, you can run aground and have a problem. So you want to stay within the channel. When it goes outside that channel, it typically doesn't stay up there a long time. We can see there was this little pullback last week. We're waiting for that again. If you want to get into the stock, wait for a pullback like this. I mean, in this market, it may not be a big pullback. You might only get, 1 to 3 day pullback like that. But that's what you want to look for, and that's when you want to pull the trigger and buy the stock. If the setup is still, ideal. Now, we get a lot of testimonials. This is from Sandra. About a year ago, she said her 401k plan was up 47% in 2017, which is unbelievable because the market was strong then as well. The SPY was up 20% that year. So she more than doubled the SPY. She couldn't have accomplished this without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this, and here is how," was so empowering. "My husband has confidence in my judgment. Thank you, Chaikin, and I feel empowered. Life is good." So this is exactly what I want you to take away from this hour with me, is that you can empower yourself with the same methodology that Sandra learned last year and is using. You can do this too and empower yourself. All right. So is it okay to go on to timing? I know this is where most of you had the biggest challenge was when you get in and when you get out. Just give me a little okay to keep going. Okay, great. Lance and others, I see you're all telling me to go. John, Roland. Manel asked if we have chart time periods of less than a day. Yes, we have intraday chart. You can see minute by minute where the price is, which is really great when you're looking at buying or selling a stock. You don't need to go anyplace else. Roland says go. Okay, so I'll go. Okay, timing. When to buy and sell. Well, I've been pointing out the buy signals. As I said, we have 6 pairs of buy-sell signals that trigger when certain criteria is met. I've been pointing them out along the way. I believe I also just explained the overbought, oversold indicator, which tracks that Wyckoff chart that's zigzagging up and down. You want to buy a stock when it's down, dipping down here. You want to sell a stock when it's spiking up above that 70. But let's look at some examples, real live examples. But first you might say, well, gee, how do you find those signals? How do you know when they're triggered? Well, we make that easy by having what we call an alerts view. You can overlay this alerts view on any stock list that you have saved in your workstation. Now, I keep a my stocks list and I keep a watch list, stocks that I'm looking at buying. And every morning, this is part of my 10 to 15 minute routine a day. Every morning before the open, I go through my stocks and my watch list, overlaying this alerts view so I can see which ones have triggered buy signals, sell signals, other alerts, meaning earning surprises, estimate revisions. If a power gauge has gone from neutral to bullish or neutral to bearish, it tells me this. It's like an executive summary. And then you can just double click on the symbol and you can go into that stock chart. So this is how you know what's happening without tediously going through your charts, looking for this stuff. We also send you an email every morning. You can opt in to get an email before the open every morning with this same data on it. So it's pretty helpful. Now, I pointed out on Salesforce.com, which is CRM, there was a momentum breakout buy signal yesterday and today. And that's at 160. So that was saying, hey, you might want to look at this stock and buy it now because it's on the move. It's got momentum going on it. But let's look at RCL. And this is what I did this morning. So I went into RCL, as I did with each of those stocks that triggered a buy signal. And I said, okay, show me the setup here. So I'm looking at the setup. Classic bull, right? Power gauge rating strong since January. It's been outperforming since mid-January. Good chunk of money coming in. It's also giving me money flow buy signal, which is telling me, hey, there's money coming into this stock. You might want to look at it. It hadn't triggered a money flow buy previously, so I couldn't tell historically if that was accurate or not. But look at the timing. It's dipping down. It's under that 30 mark on the overbought, oversold, right? So not only is it a classic bull, but it's a classic bull I can buy now. And the buy signal confirms. And then I get our Dan Russo, our chief market strategist, sends out a note every morning before the open to our members, recapping what's happened in the market yesterday and what he anticipates today. And he always highlights a stock. And this was his highlighted stock today, Royal Caribbean, RCL. And I was like, oh, that's cool. Well, Dan's one smart guy. If he's recommending this stock, and I'm looking at this chart right here, all systems say go, and it's oversold, it's dipping down, I'm going to buy this stock. So I actually bought this stock this morning at 116. But that's kind of a view into my mind. That's how I look at that alerts view every morning, and then scroll through each of the stocks and make decisions based on it. I mean, that's as easy as it can be. This stock had been on my watch list. It probably was on a screener at some point, and I put it on my watch list, and then I go through the bullish and very bullish stocks every morning looking for opportunities to buy. I also have this big arrow pointing down here to this article. We put articles on, and you can go, it expands to have more articles, but you'll see like a snippet of the top two, in that what they did the release came out today saying that Royal Caribbean Cruises is partnering with the American Ballet Theater and with the celebrity chef Daniel Boulud. So that's pretty cool. I just point that out because that's kind of fun, and that's why this cruise line is as strong as it is. They're staying on top of things. All right, so another testimony from Alex. He says, "Changed my life. I can't tell you how happy and grateful I am to have found Chaikin. I found you through Jim Cramer, and that is a day that changed my investment life." And that was back in March, so almost a year ago. So Alex, we're glad we were able to change your life. Let's go into when to sell. I think this is the hardest part for any investor. Certainly it is for me. And it was difficult until I came up with these so-called rules that I created for myself, which now facilitates it enormously. But it's easier to buy a stock than it is to sell it. Kind of like anything else. You can buy a piece of furniture or a dress or something, and then if you don't want it anymore, how do you sell it? That's always a little bit challenging. So I've come up with two different scenarios for why I would want to sell, and then what are the guidelines within each of those two. So let's look at taking a profit first, because there's two times when you want to sell. Either you want to take the profit, stock's doing great, you've made a nice profit on it, you're not sure that's going to last forever, or you're sensing the stock is breaking down. So let's look at taking a profit. Price hits that upper volatility band. I think I was showing you that on cadence. It goes kind of outside that channel market there of likely price range for the stock to stay in. So it's not likely to stay up there forever. So take advantage of it now because it could be as good as it gets. The price is overbought. Again, it's up above that. It's zigzagging up. It's spiking up on that overbought, oversold. It's above that 70 metered line there. Or it spikes after a strong earnings report. And we're in earnings season right now. And when a stock reports better than expected earnings, it can very easily spike 10, 15%. And you want to say, thank you very much. Take that. It's unlikely it stays up there. It's usually a day or two it stays up there. That's the greed. That's people rushing in. Take advantage of their greed. Sell on strength. Take your profit. And if you like, you can buy the stock back a few days later or a week later when it pulls back. I use that time and time again. So let's look at a couple of examples. And these are examples from my portfolio. So this is WellCare. Classic bull, right? For most of, it looks like May through October of last year. Relative strength was outperforming the same time frame. Decent money coming in. And I got a buy signal. This was on my watch list. I've been on a screener, put it on my watch list, scroll through the stock charts that are bullish every day, and this came up with a buy signal on it. Overbought, oversold. Oversold is ideal for timing. It's telling you is below that 30, so you don't even have to think about it. Oversold tells you it's below that 30, it's dipping down. And everything else lined up, right? This is a classic bull pattern. And the timing was right, and they were reporting earnings. And with everything green, 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 I love to get into stocks like this before they report because it's a good chance that they're going to beat. And that's this little EPS here. And by the way, we tell you when they're going to beat, when they're going to report by up here. And you can look historically and see what they've done. Green is they beat, red is they disappointed. All right here on one chart. All right, so I bought this on July 25th at 252 before they reported. It spiked up. As you can see, it spiked up. It pulled back a little bit, and then it just kept going. then it kept going, and it hit this upper volatility band here. And it hit a 52-week high. And I said, gee, this is really nice. I'm just going to take my profit. This was late September. And I took my profit at 319. I sold it in 6 weeks of holding it, made a 27% profit. It's not that hard, guys, to do if you follow the methodology that I'm showing you here. Another cue to you to sell is if you see money flow go negative, particularly when it hits a 52-week high, as it did on September 28th when I sold it. You can see that actually it was the next day that the money went, oh no, I'm sorry, mid-September, it went negative. So I'm saying, gee, it's at an all-time high. Institutions are selling. Follow the money, right? You don't want to go against the institutions. They probably know something we don't. So they're selling. That gives, and this shows time and time again, this pattern repeats itself. This is a really tell. Institutions are selling. You hit an all-time high. You sell that stock and say thank you very much. And that's exactly what I did. It was also overbought. It was above that 70 line. So how perfect is that? Everything lined up to sell. It's now 271, as you can see, but it hit a low of like 220 back in here in December. And it's now come up some, but it's still 15% below where I sold it. So these sell patterns are powerful, powerful to follow. And honestly, if you do follow the methodology, you should have the same success I do of being able to outperform in most cases. So there's a lot of money coming into this stock now, right? But would you buy it now? It is oversold. It's pulled back, right? But look at relative strength. It's underperforming the SPY, and the power gauge is still neutral. So I would say no, I wouldn't buy this stock right now. I wouldn't put this on your watch list. You don't need to watch this. There's better stocks. Boeing. This is a stock I just sold yesterday. I took a 22% profit yesterday. These yellow arrows way over on the left are where I bought the stock July 25th. And then again, 2 weeks later. I'm sorry, no, March. I'm sorry, March 2nd. And then 2 weeks later, March 16th, I bought a second position. If I feel really strongly about a stock, which I do about Boeing, I don't hesitate to double up on it and get two positions. And in both cases, there were big drops in the Dow, and you can see that with these dips. These are the dips I'm talking about. You know, when the Dow drops 500 points like this, this is an opportunity. It's not something to be feared and paralyze you. It's an opportunity to get into bullish rated stocks on sale, basically. And then I did it again down here at 328. So I have two positions, one at 341, one at 328. And then I just held on to this stock all the way up to the upper volatility band in a 52-week high yesterday at 410 and sold it. And you can see it was overbought. It's up along the 70 line up here. It's a good place to sell it. It's above that upper volatility band. There's still a lot of money coming in. It's a classic bull. It's outperforming the SPY and has a very has a bullish power gauge rating. So I put it back on my watch list. So on a pullback, I could very well buy back this stock for less than what I sold it for and do it all over again. I mean, that's the methodology I use, and you could too. Now, the earnings component on Boeing is very bullish, and the analyst estimate is also very bullish. So I knew that going into their report in January 30th, I think is when they report. So I was confident that they were going to beat their expectations, which in fact they did. It's shot up, spiked up 15%. I could have sold it, but because everything was just so darn strong, I said, I think there's there's more wind in the sails here. And that's what I did. Okay, is that clear? I mean, I know you all said that that is your biggest challenge of knowing when to sell. So before I go on to when to sell when you sense a breakdown, I wanted to just check in with you all and see if that's good, if I'm good to go. I mean, do you see how easy this is? Do you see how you can make money using these guidelines as I do? I mean, that's what this whole hour is about, is to show you how you can do this yourself. You don't need me, you don't need Mark, you don't need Jim Cramer. You can do this yourself. All right, so here I'm sensing a stock is breaking down. How do I know that? Again, this yellow is where I bought the stock. I had a buy signal. It was on my watch list. I got a money flow buy signal. This was back in late April. And so it was right before earnings. And again, it was that classic bullish setup. So I was okay with that. It looks like it's disappointing, but it must have had very strong guidance because the stock spiked up, and then it just kept going up, and then it had this big spike up of like 18% in one day, up to this upper volatility band. And there was no news out on that day. It was late April, and there was nothing that I could find in our system or anywhere else as to why that was spiking. But you know what? It doesn't matter. It really doesn't matter why. It's the fact that the stock spiked up. Take the say thank you very much and take the profit when you can. So that's exactly what I did. Also, again, look at the money flow. The money flow was going negative again, and the power gauge was kind of going back and forth between green and yellow. So that was like, oh wow, this is a really good time to get out of this stock. It did go a little bit higher. That's okay. You know, you don't always get out at the top. But look what it saved me. You know, it saved me watching this stock go from 38, where I sold it, down to 23, which is where it is today. It's 40% from where I sold it at 38. I mean, wouldn't you rather get out here instead of eke out maybe a few more dollars, take the chance, and avoid this whole loss down? I mean, it went down to 18 here in December. Look at the big money coming out of it. So there is some money coming back into it. Stock looks like it's rallied a little bit with the market. Neutral power gauge rating, underperforming the SPY. It is oversold, right? It's hovering down by that 30 line. And so let's look at, they're going to be reporting on Wednesday, February 20th, excuse me. So let's go there. Drop down. This is what you can do from the chart. I haven't done it because it's a lot of information to look at. But here I just added in the drop. You can drop down here and click on any of those four components and see the breakdown. So remember I said for stocks that I want to buy, I want the experts to be very bullish. Well, it's very bearish. And I want the analyst estimate trend to also be very bullish. And it's very bearish. The short sellers are selling it. They're considered the smartest guys on Wall Street. The insiders are not buying the stock. The analyst rating trend is plus, but relative to its industry, this is not only underperforming the SPY, but it's underperforming its own industry of oil, machinery, and services and drilling. So let's ask you. Josh has a little poll question to put up now. They're reporting on the 20th. What's that, next week? Do you think they're going to beat or miss earnings? Would you buy this? You know, if you think they're going to beat their earnings estimate, you would want to buy this and take advantage of that spike. If you don't think they're going to beat the earnings estimate, you don't want to buy it. You've been looking at the charts now for close to an hour, so you know, your eyes should be getting adjusted to reading these charts and coming to pretty quick conclusions. So let's see if I've been effective in educating you that way.
All right, I'm going to close the polling down, and here you go.
All right. The 86% of you who said no, I would definitely go with the no's. Now, there were a few that said yes, but you really don't want to buy this stock. I mean, if you look at everything here, it's a lot of red, and the only saving grace is this little bit of money, but it's not right. Remember, you only want to buy those classic bulls, which has green power gauge, green relative strength, green money flow, and it's trending up. This stock only has one out of those three. So no, you don't want to buy this stock, particularly before earnings, because I suspect they're going to disappoint and drop. Okay, so another testimony from Norm. Through following your excellent system, his portfolio now stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Does that sound familiar to anyone? Consistent earnings were just not a reality for me. Excuse me, Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So these are the methodologies you can embrace and enjoy the same success that Norm B and Sandra and our other members have been able to enjoy in investing with confidence now, instead of making money and losing it. All right, very quickly, we're going to go through how to avoid the pitfalls. This is to identify this classic bear setup and to get out of a stock before it tanks. And it's basically the exact opposite of the classic bull. And again, let's go back to our friend Warren Buffett. Avoid risk wherever you can. I mean, it sounds obvious, but risk is inherent in investing in stocks. Every time you make a decision, you risk your capital. You want to be able to invest that capital with the strongest conviction and confidence as possible. And then you want to know when to avoid risking that capital by knowing when to get out of a stock when you see the tables are turned. And again, let's go back to Dr. Wyckoff and his pattern of zigzagging. The classic way a stock drops in price is goes sideways, drops down, pops up again, back down, sideways, etc., etc. And just like we showed you on the positive side, you want to sell, when it's spiking up like this. You don't want to sell when it's down here. You want to wait because it'll come back up maybe a couple of days. It might be a week, but it invariably doesn't hang out in the same place for long. All right, who owns Apple? Apple is the #1 most widely owned stock. Just say Apple in your Q&A box if you don't mind. If you own Apple. Okay, I see John. Lance says no Apple. Leonard owns Apple. Jerry, Karen, Murthy, JB, Jerry. Okay, so a lot of you own Apple. Okay, so this is really important for you guys to listen to then, and ladies. Look at where Apple is now, right? It's 170. Bearish power gauge rating, actually very bearish power gauge rating, underperforming the SPY, but there is some money coming into it. There's money coming into most stocks now because of just this big swing turnaround. But that's not good enough to want to own Apple with a bearish power gauge rating and a negative strength. Remember when I was talking earlier about, I think it was Tusk, Mammoth Energy, when the stock reaches an all-time high and money flow is negative, we call that out as a money flow sell alert, saying, hey, get out of the stock. You can see it was bumping up against that high volatility band. This was back in October 3rd at 230. It reached a high of 230 back then. That's when you wanted to sell Apple. And our members knew to sell Apple because they knew this pattern. money flows negative, all-time high, sell, take your profit, and say thank you very much. Let somebody else buy Apple and watch it go down. A couple of weeks later, the power gauge rating turns negative. That was on October 29th at 219. It's still not bad. I mean, if you are members who owned Apple at 219 would have known then, if they hadn't already sold it, hey, I better get out of this stock. Not only is there negative money flow kind of back and forth, but power gauge rating is negative. And certainly when relative strength kicked in a few weeks later and went negative or red as well, that's clearly when you want to get out. And you did get some sell signals here on the way if you weren't already out of the stock. So the expert trend is very bearish. The earnings estimate, analyst earnings estimate is very bearish as well. The stock's now at 170, is 26% from its high. But this is how powerful these methodologies and basically rules-based methodologies can work and can help you, can allow you to know when a stock is breaking down, sell that stock at its high. When it hits the upper volatility band and money's negative, I mean, that's just the perfect setup to say, get out of the stock at 230 and don't write it down to 170. Let's look at another classic bear, Qualcomm. You know, this provides the chips for Apple. Power gauge went bearish on October 8th. At 71, I put a line here, just that's not part of it. I just added that so you could clearly see when it went bearish at 71. And then a few weeks later, you do get a sell signal if you weren't already out. But when you get that power gauge rating going red and negative money flow, that's really a call to action to say get out of this stock before it gets worse. And certainly if you didn't, hopefully as members, you would have minded these sell signals along the way and sold it before it continued to get worse. These also, Josh uses these bearish examples to trade options and bet on the downside. So he's our in-house options expert. Josh teaches our members twice a week on 1 hour segments, how to trade options, you know, everyone from beginner options to advanced, and how to use these patterns as perfect setups to trade on the downside. One last example, NVIDIA. I know this has been a favorite of Jim Cramer's, not recently, but before it kind of turned around. But you can see what happened in October with the power gauge rating turned negative, relative strength kicked in negative, and money started coming back. And look at the, you know, you can see what happens to the stock here. You know, that was back October 1st. The power gauge went negative at 290. The stock's now at 154, which is down 47%. This is how Chaikin can keep you out of these nightmares before they happen. And I put this example up here of Goldman Sachs because October 18th, as you can see here, I copied this snippet of this news article. October 18th, a couple of weeks after power gauge went negative, Goldman Sachs is coming out recommending a buy. Now, looking at this chart, red power gauge, underperforming the market, money flow coming out and trending downward. Do you think that's a stock you want to buy? I mean, really, you've got to have your own tools and ability to make your own decisions with your own educated decisions. You can't rely on, this is a prime example of why you can't rely on outside research or what you hear on TV and the news cycles. You know, you've got to have a way to justify it yourself. Our members would have known when they heard this to go, oh, Goldman Sachs, hey, you know, they're a big firm, a lot of clout in the industry. They can move markets prices just by their buy and sell recommendations. Our members would have gone, plugged in the stock and said, no way, I'm not buying this stock. It's all red. So you've got to have your own way to do this, and that's why it's so important to take note of what we're showing you here, and know that you can incorporate this into your own investing practice. All right, so NVIDIA is reporting tonight. You see up here, Thursday, February 14th, and that little moon. Josh is going to put up one final poll. This is one final poll. What do you think they're going to do? Do you think they're going to beat or miss earnings? And they probably reported now. So don't cheat. Don't go to your computer and look it up. But just based on the chart you're looking at right now, and the knowledge that the expert component and the analyst estimate trend were both very bearish today, do you think this stock is going to beat earnings estimates or miss? And this is your final quiz. Okay, what do we have, Josh? Okay, 57% say we'll miss it, but 43% say we beat. Josh, do you know if they reported yet?
I do know that they have reported, and NVIDIA has beaten on both the earnings and revenue.
Okay. What did you know about guidance? Guidance can often swing it. It can be harder to find.
No, I have to dig a little more for guidance. They talked about negative gaming, though. We'll see how it looks.
What's it doing in the after hours?
Yeah, we can check the after hours real quick. In the after hours, it is up.
It's up. Okay.
It's up quite a bit.
Yeah, it's up. So they must have guided well. Yeah, it's up 8%. Okay, so we took the chance and put it up here, and we're proved wrong. So it's not always fail-safe. No system is going to work 100% of the time, but these guidelines, I would have anticipated that they were going to disappoint. So those 43% of you proved me wrong. Good for you. All right, so I said that a number of our members trade options. They can make incredible returns. George here, in the 5 business days, he's been using Chaikin. He's paid for the subscription over tenfold. Initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. So this is all doable, guys. So I made you a promise that you would discover how to find the best stocks to buy on pullbacks. Can you just give me a little shout out in your Q&A box? Did I deliver on the promise? Do you feel you were shown, you now know how to find the best stocks to buy on pullbacks? All right, great. William, Karen, Peter, Johnny, Manel, John, Karen. Wow, this is great. You guys are awesome. So yes, okay. So see, you can do this. I mean, wow. Lots of yeses. Okay, this is great. Awesome. Okay, so I'm glad I delivered on my promise to you, and now I've given you the confidence so you can make investment decisions and take some great vacations yourself based on your profit. So what you will need to do, your next step, is to take out a membership with Chaikin Analytics. Get the workstation, which usually goes for $2,195 a year. On the webinar special, we're taking $300 off when you become a member by Sunday midnight. But we're going to sweeten the deal a little bit more, so please stay with me a little bit longer. The number of bonuses come into that, too many to recount here. The highlights include the screener, which I showed you how, which is an enormous time saver in how to screen for stocks, find those classic bulls. The options overlay, I alluded to that. This is what Josh will teach you when you become a member and sign up for his options classes. We give you we have an overlay that shows 3 risk-reward scenarios. So you don't have to do all the math and calculation. It does it all for you. It's pretty amazing. And I highlight this because I think this is really, again, our secret sauce. We hold small group tutorials for our members to help you set up and use all the features. So as early as tomorrow, I believe, right, Josh, you can be into a small group tutorial. It'll show you how to set up your stock list, how to do those alerts views, how to find those signals.
That is correct.
How to use the screener. Exactly, right. So that's as early as tomorrow. When you become a member by tonight, you'll be in one of these sessions as early as tomorrow and be on your way as early as Monday. And this is unlimited. You know, we have ongoing coaching and support for our members every week. There's a whole calendar of sessions. And if you find that your circumstances are unique and you feel you need more one-on-one coaching, we give that to you for free. So you can set up a time specifically with Josh or one of our team members, and they will support you one-on-one with a phone call and screen share of how we can make sure that Chaikin is working for you. Another last shout out from Jim Cramer. If you don't use Mark Chaikin's work and Chaikin Analytics before you pull the trigger, well, you're going against 32 years of my work. Jim's been a follower of Mark's going back to money flow. That's what he refers to, 32 years. And you'll hear him talk about this money flow, Chaikin money flow all the time on CNBC. So I told you we were going to make the pot a little bit sweeter. We're going to take an extra $100 off for total savings of $400 when you become a member by midnight tonight. So I encourage you all to take action now. The market is on a tear. Get that checklist going for you so that you know what you're going to buy, and when those pullback comes, you'll know how to see those pullbacks and know when to pull the trigger and invest with confidence. So thank you again to Hubert Centers and to Benziga for sharing this with your communities, and of course to the Chaikin community as well. We value you and appreciate your loyalty. So Josh, I'm going to turn this back to you to close it out.
Thank you, Sandy, for your time. Thank you, everybody, for attending today. To take advantage of Sandy's offer, I have put into the chat window the number that you can call us at if you have any questions. My colleagues are standing by. They will happily answer any questions that you have. Or you can just go right to the link. It's www.chaikinanalytics.com/Sandy. The discount will automatically be applied. As Sandy mentioned, you can be on a small group session as early as tomorrow. You'll have access to all of our archives immediately. So all of our sessions, if you're into options, I did a session today, you'll have access to that archive immediately, as well as all of our other sessions, including the ones with Dan Russo, our Chief Market Strategist. Again, the number is 877-697-6783, or go to www.chaikinanalytics.com/Sandy. Thank you.